Hello and welcome everyone to the Gold and Silver Club Weekly Commodities Review presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will be covering an end of week summary for the metals, the energies, agriculture. We'll be looking at the top trades of the week. We'll cover live market commentary and technical analysis. We'll also have a look at the week ahead, so the key events for next week, and of course we'll be answering any questions you may have as well. Right, so gold price currently is actually trading at $1,286 an ounce. Commodities have gained on strong safe haven demand this week. The geopolitical conflicts between Russia and Ukraine is once again on the front burner of the marketplace as we enter a three-day U.S. holiday weekend. So it's bank holiday on Monday in the U.S. On Thursday, Ukraine's president declared that Russian forces had invaded the southeast region of the country and that forces were in full combat. NATO released photographs shortly after confirming that it has evidence Russian artillery units were operating in Ukraine and projected more than 1,000 Russian troops were in Ukraine assisting pro-Russian rebels fight against the Ukrainian Armed Forces. On the news, precious metals, energies and agricultural commodities rose as traders sought safe havens. Both gold and silver rose on the situation in Ukraine, with the yellow metal touching a weekly high of $1,298 an ounce, while silver jumped up 11 cents to trade at $19.57 an ounce. In the other precious metals, palladium gained $5.73 to touch $898 US. In the energy markets, WTI oil hit $94.68 a barrel on concerns tensions between the Ukraine and Russia, the world's #1 oil producer, could cause a disruption to global supplies. And in the grains, Russia and Ukraine producers of 20% of the world's wheat. The above reports caused wheat to rise 2.38% to $5.64 a bushel, whilst corn jumped 1.26% to trade at $3.61 a bushel, as highlighted in our top trades of the week. We'll take a look at that certainly very shortly. The market's looking, there's lots going on just this afternoon, so we'll certainly take a look at the technicals very shortly as well. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, the commodities, gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies. They have a proven track record of generating returns for traders and a regular contributor to a number of financial publications, speaking at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global and business financial publications, and we've appeared frequently on financial television. Okay, so that's a bit of background on the Gold and Silver Club. So again, right now we're trading at $1,286 per ounce on gold. So we'll take a look at that very shortly. Before we do so, we'll have a look at our top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, we had a lovely breakout earlier on this week when we saw the $1,272 an ounce level hold, very key level of support. We had a nice trade on here, 150-point profit. So the risk on that was $75.750 US for each lot, traded for a $1,500 US profit for a lovely 2-to-1 breakout earlier on this week. We also had a coffee breakout, the risk on that tighter, 40 points risk, so $400 risk for each lot, traded for a profit of 120 points, or $1,200 US profit for a 3-to-1. And we then had a wheat breakout as well just yesterday, which was helped by geopolitical news. So we had a risk on this trade of 70 points, a profit of 175 points, so $1,750 US profit for a 2.5-to-1 risk to reward. So those are the top 3 trades of the week. So we have seen some nice surges in the commodities. We'll just go over to the live technicals now. The markets, there's lots going on just today. The US is closed on Monday. We're seeing breakouts on the energies at the moment, and gold holding a very key support line. So first market we'll take a look at, we'll just have a look at light sweet crude oil at the moment. We can see a very key area of resistance, 94.46. We've been consolidating within this zone all week. We did break out yesterday, triggered one of our setups on this. We're currently trading at 95.28 on that, so $95.28 a barrel. We're up around 70 to 80 points on this trade. So you've got a nice breakout here. You can see we'll be in the short term looking for a retest of previous support here, so the previous support zone at 95.85, looking for a breakout. We're just about coming above the pivot high here, which is sitting at 95.38. We're getting a nice breakout on WTI, which is also following through to Brent. If you go out on the, we're just on the futures contract, if you go out on the larger time frame, you'll see this is a very key level of support, the 92 zone. We'll have a look at Brent as well. Brent, again, I'm on the October futures contract. We've had a consolidation on Brent over the last week. Again, very key support zone holding around the 101 zone. You can see this nice trend channel which we've been developing here on Brent. Still finding nice support on that. It's offering day trade opportunities here as well. You can see very clearly got a nice little trend line which is developing on the tighter time frames here. We've just seen a little bit of a spike up actually in the last half an hour or so on Brent. So we're looking to really close above the 103 level this week to get a continuation and get higher prices as we go into next week. Looking at the other commodities here, we did get gold supporting a very key zone here, the 1,272 zone on Bank Holiday Monday here. We had a test on that on Friday as well as Bank Holiday on in the UK. This is a very key support zone, the 1,270 level. You can see just going back on the chart here, just look at the price structure of gold. You can see going back to August last year, very key support zone, 1270. It was a key resistance zone going back to February earlier on this year. Then again, a support zone. We broke through that support zone on just prior to the FOMC in June. Then we broke out again from 1270 and now it's providing support. So we are seeing a trend line here providing support, a downward trending channel. So we're forming a pennant now on gold and we'd like to see which way we're going to break. Now for the short term, it does look like we are following another shorter term trend line here to the upside, so we could see certainly some more upside here for the short term on Friday. The US dollar index has had quite a strong rally over the last week or so, the last month actually, but it's starting to run out of steam. So if we do see that sell off this afternoon, we could see this price around the 1286 level get supported, and we'll be looking for a rotation higher here back up to the 1300. So if we do get that breakout to the upside on gold here, a continuation. If we break down here, if we break through the 1270 level, we could be due a move back to the next key support zone at the 1250 to 1240 zone. But for the time being, we are holding key support and we're looking for a rotation back up to the 1300 zone. Looking at other metals which are looking very lucrative right now. Now Palladium is a market you definitely want to be trading. Nice V-shaped reversal pattern forming right here at resistance. Of course on Palladium, $900 an ounce was the level that we broke out to about 10 days ago. We're retesting that level. That is a 13-year high for Palladium. It's also marks a very key resistance zone for Palladium. If we can break out above 900 here, we haven't seen these prices for the last 13 years. Palladium being the strongest performing commodity over the last 5 years, and you do definitely want to get access to this market. It's such a fantastic market to trade on. The breakouts and the pullbacks, very, very clear price structure here, very clear trend channel that we've got on Palladium at the moment. So do add this to your watch list. It looks like if we get a break of 900, we will be really shooting for the next key psychological resistance levels just above here, which will be the 950 level next, but we'll be looking to see if we can get a break and a close above 900 today. Platinum, also another key market you want to keep an eye on at the moment. Platinum, just going back historically on the chart, you can see the 1400 level has provided a key level of support and resistance previously. We're just about holding on to that level at the moment. Again, if gold holds onto its support zone at 1270 here and we see a move to the upside, we normally get a follow through with platinum as well. We've got a very key support zone, 1414. I'll be looking out to larger time frames here. You can see the price structure quite well here. Essentially, we'd be looking for this zone to either get supported at 1400 or broken down. We've got to trade really in either direction here, just because we're at an event area. For platinum, we'll either get supported in a rotation higher, or we'll break down and we'll have a sell short opportunity. So definitely one to watch. Platinum's been weaker, as well as similar to silver here as well. You can see silver in a very clear downward trending channel at the moment. Now silver is finding support at 1931. We've had 5 consecutive days of tests of that level, so there's going to be a lot of stop losses just under there ready to get hit if the market does sell off, and there's also going to be a lot of sell short pending orders under this level as well. So expect a good move lower if we do get a break below the 1931 level. We could really be due a significant break lower here, certainly about a 50 cents move, 50-point move lower. And you've got the next key support zone would be coming down to circa initially psychological support at $19 an ounce, but then coming down for swing lows around the 18.75. So do keep an eye out for that on silver. We are on a downward trending channel. However, these inverse hammers here, what you see on the daily, haven't been confirmed. So the price of silver needs to break 1931 to confirm that, or we'll get a break out of this downward trending channel. Also note with the softs at the moment are worth having a look at. Wheat very much range bound within this pennant formation at the moment. You can actually see got another retest of the trend line here today. So we are awaiting either a breakout to the upside or a breakout to the downside, and in order to get more action really on the wheat market as we go into September, we'd like to get a clean break, get a nice trend start to develop either to the upside here or a breakdown lower, take out 518 here support, and really start to have a continuation of the downward trend. But in terms of the actual technical structure of wheat at the moment, we're in a pennant formation awaiting a breakout. What we may see here just on Friday is a rotation to the lower end of the trend line here, coming back to around the 530 zone. Okay, so we've got an inverse hammer developing here just off the trend line. Corn very much staying range bound at the moment as well, stuck in this consolidation between 347 347 and 369 as well. So we're just, whilst we're stuck within this consolidation, we're on the sidelines waiting for a breakout. You can see this week we've had nice breakouts on natural gas, breakouts on Brent and WTI. So we're waiting just to see which way corn is going to break out. Nat gas as well. I'm on the futures contract at the moment, but we've had a lovely V-shaped reversal pattern breakout over the last week. If you go out to the historical charts, I'm currently trading on the October contract, so you're limited in terms of the data you'll be able to see. But if you go out to the historical charts here, you'll see we've had a nice breakout on natural gas, and we are back above the 4.00 level here. So we could really be due a decent breakout to the upside as we come into September here. So natural gas, again, one certainly for your watch list here as well. Okay, so we'll go over to the key news announcements very shortly. But the real key markets I would say to watch at the moment are definitely going to be gold, to see how we close on the Friday. In fact, we're getting a little bit of a nice supported bounce just at the moment. If I break that down and just show you where we are at the moment within this overall trend channel. So do watch for gold, potentially a nice entry here just for a Friday day trade. And do keep an eye on the energies as we go into next week. Brent, WTI and natural gas, and certainly Palladium as well. Palladium, you want to look out for a breakout today. So I would not be surprised at all if we can break above 900 here to get a really decent breakout to the upside. It's going to trigger a lot of pending orders for a buy here. So do keep an eye on Palladium. Very lucrative, and it's about to break 13-year highs. Okay, so with that, let's take a look at the major news announcements next week. We've of course got non-farm payroll next week as well. So first of all, Monday, of course, it's the bank holiday in the US. Okay, but Tuesday, the 2nd of September, 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the US Manufacturing PMI, the Institute of Supply Management, the ISM, Manufacturing Purchases Managing Index report measures the level of new orders, imports, production, supply deliveries, inventories, employment and prices to determine a positive or negative economic direction. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Then Wednesday the 3rd of September at 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the US factory orders. So factory orders of course measure the change in the total value of new purchase orders placed with manufacturers. The report also includes a revision of the durable goods orders, order data released a week earlier, so a higher than expected reading should really be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And then Wednesday, the 3rd of September at 4 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. So if you're trading the energies, that's a major announcement for oil. Thursday, the 4th of September at 2:15 p.m. Central Africa time, 8:15 Eastern time, we have the ADP non-farm payroll. So the ADP National Employment Report is a measure of the monthly change in non-farm private employment. It's based on the payroll data of approximately 400,000 US businesses. The release ahead of government data, it's a good predictor of the non-farm payroll report. Of course, we have the following day. A higher than expected reading should really be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Thursday, the 4th of September at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. Now that is very important for your natural gas trades. We had a lovely breakout yesterday on that announcement. The Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So a higher than expected reading should be taken as bearish in natural gas prices, and a lower than expected reading should be taken as bullish. And then Friday, the 5th of September at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US non-farm payrolls. So that will be a major announcement. We'll be covering that later in the afternoon, the post non-farm payroll. The US non-farm payroll report measures the change in the number of people employed during the previous month, excluding the farming industry. Job creation is, of course, the foremost indicator of consumer spending, while accounts also for the majority of economic activity in the US. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And you can actually find out how to trade that live with the Gold and Silver Club. You can request information on the Gold and Silver Club live trading room program, our daily trade calls, our upcoming commodity courses. Just very simply hop along to our website and just go to www.jointhegoldandsilverclub.com, or call us at our Johannesburg office at +27 11083 8403 to find out more. And of course, subscribe to our newsletter. You will get access to our free weekly report on the precious metals, energies and agriculture, as well as live market analysis and prices. So I'll leave those details on the screen for you there. That is it for today's session. So I wish you good luck with today's trading. Have a great weekend, and we look forward to hear from you, and we'll certainly see you on the next one. Okay, take care everyone. Cheers. Bye-bye.